Yeah, so I got another question. I am on a roll. This time, the question was regarding business structures. The question was basically asking for um, the types of business structures and what the best business structure is, and explaining the difference between them. Now, I cannot tell you what the best business structure is just because this conversation that we're having is very general again. So it's not going to be specific to what it is that you're going through or what it is that you need. What I can do is I can give you a brief explanation of each of the business structures and talk a little bit about what they are, when to use them, and various different things like that. We can start off with, and I'm not even going to talk about all the business structures because there's a lot of different business structures out there that people don't even realize. I know B Corps are becoming more popular, so I'm not going to talk about that. I'm going to speak on primarily what most people know about, which are the LLCs, the C Corp, or the S Corp, right? Or sole proprietor, right? We can start off with the sole proprietor. With that, that's basically you doing business as, right? You yourself, whoever you are, say, hey, you know what? I want to be known as ABC XYZ. I'm going to be doing business as ABC XYZ. So basically, you go out to your county recorders, you file a fictitious business name statement, and you're in business. There you are. You have a DBA, you're doing business as, you're a sole proprietor. You don't even have to take it to that level to where you're doing business as a sole proprietor. You can go out there with your own name and say, hey, I'm in business, and there I go. And you're on a Schedule C, you're claiming your income and your expenses on a Schedule C. You have no separation from your business. You are the business, meaning that any liability that the business takes on, you're taking on 100%. And then you have an LLC, which is a limited liability company. Now, you hear a lot about LLCs and people talking about LLCs and, oh, get an LLC and do this and do that. There's a couple things that you need to understand about an LLC, okay? An LLC, when we're talking about taxes, it is considered, if it's a single member, it's considered a disregarded entity, which means that on your personal taxes, you are going to file a Schedule C with the LLC income and expenses, right? With the LLC. Now, there is liability protection when you have the LLC. There is some protection there. There is a separation between you and the business because you are setting up an entirely new structure with the business, right? You go down to the Secretary of State's, you can go right on the website, and you're going to file for that entity to have its own birth certificate, basically, right? Formation. It's articles of organization is what's filed. So it's basically operates like a birth certificate for you. You're giving birth to an LLC, to an entity, okay? So you can also get an EIN number for that entity, which is like a social security number equivalent to a social security number for a person. You can get an EIN number for that entity, and bam, you're in business. Again, if you're a single member LLC and you have not elected to be taxed different, you're considered a disregarded entity and you will file a Schedule C. You still have liability protection with an LLC, okay? As long as you do not pierce the corporate veil. How do you pierce the corporate veil? A lot of times because people intermingle funds. They use their personal account for business or their business account for personal. I don't know if you guys can hear me with all this noise. I got the windows open in the conference room and it is pretty noisy out here. Okay, I had to come up out of the conference room. The noise was just too much to bear. Okay, so just picking up where I left off. I know we started talking about LLCs and we started talking a little bit about disregarded entity, it being a disregarded entity when it comes to your taxes. So when you're a single member LLC, you've gotta, the second part to a single member LLC is you've got to really pay attention. One of the benefits to having an LLC is what they call charging orders, right? What a charging orders does is it gives the creditors, the orders of collection, basically, right? So when it's a single member LLC, a lot of states don't really recognize or don't really give you the charging order protections that you need. There's 5 states that really will provide the protection you need as a single member LLC: Wyoming, Nevada, South Dakota. I'm sorry, I'm having a brain fart. Wyoming, Nevada, South Dakota. Wyoming, Nevada, South Dakota, Delaware, and Alaska. Sorry, guys, I kind of went like, anyways. Those are the 5 states that will recognize a single member LLC and provide still those charging order protections that you need for your LLC. Now that is an extra layer of protection, and this is one of the reasons why LLCs are really great for asset protection and not just liability protection. Okay. Now keeping in mind, only 5 states recognize though when you're a single member LLC. Now multi-member, of course, you do have those protection orders in place. So and the difference real quick between a single and a multi-member is just the amount of people. With a single member, it's one person that basically is a member manager, or one person that owns the LLC. When it's a multi-member, then it's multiple people, so it's other than one. So if you're just in business by yourself, you've got to be really careful about setting up on what type of structure you have when you're looking for both liability and asset protection. The next type of structure would be an S Corp, right? Let's talk about corporations, and either an S or a C Corp. There's again multiple different types of corporations. We've got your B Corp, which is just a benefit corp. We've got your nonprofit, which is a nonprofit organization, and then of course your S and your C. Okay, so professional corps. There's a lot of other corporations out there, but again, we're only touching on your S and your C because these are basic ones that you hear people talking about all the time. Okay, now an S Corp is what they call a pass-through entity, meaning that any profit or loss is passed through to its shareholders with a K1. So then the shareholders are responsible for taking that K1 and putting it on their own taxes. It's a pass-through entity. A corporation, you'll hear all the time people say, oh, the double taxation, the double taxation, the double taxation. Don't do a C Corp because of the double taxation. Well, that occurs because again, what we talked about was on an S Corp, because it's a pass-through, you do an information return to the IRS. That K1 goes to the shareholders, and once that K1 is distributed, right, the shareholders on their personal taxes will pay taxes if there's a profit, or reduce down their taxable income if there's a loss from that K1. With a corporation, your corporation is going to file its own tax return, meaning if there's a profit at the end, you're paying taxes on that, and then whatever is distributed to the shareholders, or any distributions that are made, then the shareholders are going to pay, or the owner is going to pay taxes on that as well. So that's where the double taxation occurs. What people don't really understand is when the double taxation will occur, right? If you don't have a profit at the end, right, your bottom line is not a profit, meaning like I can, in a sense, pay myself payroll and make sure that I pay myself payroll. Again, I'm not going to get too much into detail with that. Let's talk about specific strategies, right? Because there's a whole lot of different strategies that you can set up. Again, it's really going to depend on what it is that you're trying to accomplish, as far as what type of entity structure that you should, that's going to be most beneficial for you. Because again, an S Corp, because it is a pass-through, you hear about people always talking, oh, do an S Corp, or do your corporation as an S Corp. That it's not going to always benefit you, especially if you have a W-2 income. The other thing with an S Corp is you got to consider reasonable compensation. It's a lot of other factors, because with an S Corp, because it is a pass-through entity, you don't have self-employment tax that you'll have to pay on like a Schedule C, right? You're paying self-employment tax. You're avoiding some tax, but keeping in mind that when you're dealing, again, this is not specifics. I'm not giving you what you should do. There's so many different scenarios that we can talk about that would determine what type of entity structure would be best for you. So I cannot say an S Corp is going to be good for you. I cannot say a C Corp. I cannot say an LLC, because I don't know your situation. This is general video that I'm recording. But when you're dealing with a pass-through entity, it's important to know that what other income do you have coming in? Do you have reasonable compensation? Is there a profit at the end of the business year, right? At the end of calendar or fiscal year, or whatever you go by. Is there a profit at the end of the year? And then passing through, if I have a K1,
where is that going to put me at? Is my taxable income going to be higher? Because it is taxable income, that K1, okay? And a C Corp, keep in mind that right now it's a 21% flat rate. Whether you make $100, $1 million, $1 billion, it's still going to be the same tax rate of that 21%, which is really, really low, okay? I'll do another video on the history of rates and how that all of that good stuff. I'm not going to go into detail now about the rates or about changing rates or different things of that, so I'm not going to talk about that right now. It's not the intent of this video. Just wanted to kind of touch on business structures and the different type of entities. When you have an S Corp or when you have any type of corporation, you also have that liability protection as long as you don't pierce the corporate veil. How do you pierce the corporate veil? You pierce the corporate veil if you intermingle funds. If you use your personal account for business or your business account for personal, you're intermingling funds, and you can pierce that corporate veil. Once you pierce the corporate veil, you no longer have the liability protection that you normally that you look for in a corporation. So you've got to be very careful about piercing that corporate veil, right? Again, I'm not going to go into too much detail about that neither. If you have specifics that you want to speak about, or you know, if you're looking for a specific type of business because you're doing a specific type of business, you know, call me. We could do a consultation. I don't mind it at all. Again, my information that I'm giving you is very general. I'm not speaking to you because I don't know what type of business structure you are. I don't know what your liability looks like. I don't know what your tax life looks like. So I'm not speaking to you in general, okay? So keep that in mind. If you need information specifically for you, right, then please feel free to reach out to me. Give me a call. We can go through whatever we need to go through and do it that way. Again, general information. I hate that I have to throw this disclaimer out there, but so many people take information that they hear and they feel like it applies to them and, oh, let me do this. No, this is general. All right. I hope this helps.